Tuesday, Warriors. What a turnaround Tuesday we had yesterday. How are you, everyone? Welcome to FACE. Follow us here in FACE if you need a sanctuary, somebody to help you survive the volatility that's kicking back into the market. So I want to start off with the S&Ps before I hand it off to Blake. This was a great failing rally to fade. And this is what I'm thinking here. Last week I talked to you about the off number, the weekly signal that we did not get last week. And this week the off number is 24.33. You just count back 2 candles. So last week we didn't get that close. It was here. It was 37, closed above it, but reversed this week. So the close, the 2-week signal I'm looking for is 2433. Everyone got that number? By Friday, under 2433 is a 2-week reversal in the S&Ps. So when I look at that off number short term, that would be a sell zone for me. Okay, this moving average comes in a bit higher up there, 36, but I would try the off number. I think a lot of people think the bulls are going to get bailed out. Every dip is a buying opportunity. Every dip's a buying opportunity. I think that it might be different. We'll know by Friday. But if you weren't there for this, the key is going to be what happens here, because back under these lows of 24.18, it's going to look real negative. You'll almost have a key reversal week. So I would view this as a selling opportunity between 33 and 36, risking these highs, looking for a Friday close under 24.33. The reason I think it may attain those short-term targets is the yen doesn't look completely done to me. Here's ForexAnalytix view. Potentially on back under 1170, it's going to be a negative signal. I'm sharing this. Call me Freebie Dale. So when I look at the yen here, I think there's a possibility of one more push, and that may keep risk on for a day or so. But I look at the 1-hour yen, and I don't like this as a top. You know, I'd like to see one more rally to new highs, maybe up to the major trend line that the team has up here. It looks like about 1270 or so. And if you're a subscriber, you just don't get the picture, you get the analysis here. So USD has failed near the 12.25 level, even though we have overshot the price and moved back under 1175. Talking about the RSI continues to be divergent. So that's my view. Just tying the yen, one more push up in the yen, and shorting opportunity in the S&Ps. You know, if you caught this failing rally in the S&Ps, you should be able to short it with the profits that you made from selling the failing rally up here from Monday. So that's my view. And Blake, I'd like to toss it over to you, see what you're thinking in here, buddy. I know that you got some.
Yeah, good morning, Dale. How's it going?
Good, bro. How are you?
Good. Yeah, you know, the market was thrown for a little bit of a loop today. There's some sources that say that that Mario Draghi was misinterpreted about what they're going to do with their easing, and so the euro sold off aggressively.
Yeah, they're not that happy about it appreciating, are they?
No. I mean, this is a situation. I mean, I was just discussing with some other traders that you know, the euro is probably within proximity of. It was within proximity. This is before the spike lower of a pretty big resistance here at 114, and we were getting up there, and then all of a sudden these you know, unnamed, it's always unnamed sources, you know, sources, who are the sources, you know, sources.
Oh, you know, I know George Sources.
Yeah,
oh,
George,
no, that's Soros. Oh,
George Soros. Yeah, that's right. So the euro actually sold off aggressively right to the breakout point. And you can see right here, we basically came down to 112, and then we've already started bouncing back. You know, the markets are already, you know, well, the euro's already started bouncing back. Now the S&P, on the other hand, the S&P, we sold off to a new trend low in Europe. We've rallied back, and we're back testing basically where we should be. I mean, this is previous support, which is acting as current resistance. So we're stopping where we should. Now, I mean, the open is in the next half an hour, so we're going to have to see obviously what happens here. But if the market
came off a little 3 drive bottom there, you see that 1, 2, 3, and then pop. I'd like to just go back to the euro, because if my memory serves me correctly, Blake, you had some type of longer term channel that came in around 114. I think it's your weekly chart.
Yeah, it's a little above.
There it is. Yeah.
Yeah.
Okay, that's what I was talking about. Okay.
Yeah, and maybe this is it. Maybe we peaked, and maybe it's drawn like this. I don't know. I redraw trend lines all the time because I'm not perfect, nor anybody else is, and that it's like I even said yesterday, technical analysis is not an exact science. So you gotta, I adjust trend lines all the time. But
trend lines are born to be broken. Like trend lines are born to be broken.
Yes, as support and resistance levels are as well. So, but I do think we have a lot of resistance up here, and if you guys didn't see like the DSI and the euro, it's at 83. I mean, the market is aggressively bullish. The retail market is long, so to see the euro sell off like this doesn't really surprise me too much. What I'm going to be watching now is I'm going to be watching equities, see how the S&P reacts around this area, around this 2430, 2432. Excuse me.
Yeah, 33 is an off number. It's just a close from 2 weeks ago. Yeah, I've just seen those numbers come into play. Yeah, so that's what I'm talking about when I talk about 2-week reversals. It's a real simple deal.
And that makes a lot of sense. And I think the S&P around here is going to be pretty important to watch what happens. I mean, especially intraday. We're knocking our head up against resistance. If you let me see here. If you take, this is a 5-minute chart, so let's go over to like an hourly. Hourly is not going to be as good of a view. Maybe a 15-minute chart. It's going to give you the same thing. I just want to draw this out.
Yeah, isn't that an impulsive decline too? It doesn't look corrective. I don't know. We'll ask Steve if there's 5 waves and stuff like that.
So you can see how we're knocking our head up against resistance here, and so what happens here at the open is going to be pretty important. If we can't sustain these gains that we have, that's probably going to be pretty bearish for the S&P and the markets in general if we can't sustain these gains, if we can't break higher. But we're stopping where we should technically, regardless of the comments that came on.
Okay. So it is hard to get short the dollar down here, isn't it?
Yes and no. I mean, if you look at the dollar, okay, so the dollar, we broke below this new trend low here.
Yeah.
And now we're starting to gain some support. We're trying to hold. It's a big 618 retracement. It's a pretty key support for the dollar. And up until earlier, the dollar looked like you could stick a fork in it, but we did get a rally back. I do think that, and you were talking about the yen. The one thing about the yen is if the dollar yen starts to sell off, the question is how does the market see that, and how does the dollar react if the dollar yen sells off? Because the dollar yen failed basically here at the 618 retracement. You can see right here. I can delete that, but we failed basically at the 618 retracement. If we come back below this 111.70, that's not going to bode well for the dollar, but how does risk appetite respond to that? I don't know. So it's going to be it's going to be interesting to see what the dollar does here. especially with the dollar yen, because if the stock market continues to hold up here and we can actually start breaking higher, the dollar yen has the potential of, getting past this, like, this isn't channel resistance, this is just resistance. We get past this resistance. Where
does that come in, Blake?
That comes in around like 112 and 70 ish, So, but I, like, for example, I already this morning I sold some Canadian yen, and I'll show you why. The Canadian yen, personally, I did, and we don't cover this on ForexAnalytix, but this is something that I shorted. We hit a 618 retracement of this move right here, okay, and of this range, basically the 161% extension. So there's a major fib confluence here on the Canadian yen when we got to 85.70. So I shorted it actually 85.70. Hey, look at my price. I'm sorry, I'm yawning. 85.70. I didn't sleep. I didn't sleep as long as I wanted to. Put it this way. I actually have been sleeping pretty well, but last night I went to bed a little later than normal. I was up with my kids, and then I got up a little too early this morning. So anyway, so we hit a major fib confluence, and so I did short some Canadian yen, because if the S&P is and I'll show you the Canadian dollar here really quick, but if the S&P is peaking around here, then the Canadian yen may roll over. And then also, if you take the dollar Canadian basically hit some trendline support. Now, one of the other traders that I share ideas with, his name's Chi, he was pointing out this trend line, and you can see this trend line came right into play. We had this pennant formation that finished, and if you use ForexAnalytix, this morning, that chart was sent out. It was sent out at this morning when we were trading at 130, like 90, and said basically RSI is divergent, 4 hour past 127% extension. We were oversold. Trend line coming into play after surpassing the target of the pennant pattern, which may also allow for a bounce and caution if short. So if you were short the dollar Canadian down here below 131, you took heed of that, it's already starting to recover, since that was sent out. That was sent out probably around here, and you can see the dollar Canadian has started to bounce since then. And that doesn't necessarily mean that you want to be long the dollar Canadian per se, but like I said, I took
shorts, but covered shorts.
Maybe covered shorts, and then I took cues off of that to short the Canadian yen. So that's exactly when I shorted the Canadian yen, when it was right here, right there at 85.70 is when I shorted it. So I use a lot of the cross market analysis to trade. So if I'm seeing something on the Canadian, I may not necessarily trade the Canadian dollar per se, but the Canadian yen was in my crosshairs, and that's what I traded. So
great analysis.
Thank you. And so those are.
You know what? I'm going to have to say that there's more than one freebie Steve in the house.
There is more than one freebie.
You know what? Steve. We all are, Blake.
We are, and hopefully, that the view of, the ForexAnalytix system can give you guys, especially those of you that don't use it, a little bit of flavor of what, how you can use the product, not necessarily just, oh, well, that was the Canadian. How did you trade the Canadian yen? Well, now you know why I was trading the Canadian yen. Interpreting what I saw on the dollar yen and the Canadian dollar. So just taking that and trading a cross rate as a result. A couple other things that we should probably take a look at is the euro, like I mentioned before, it had sold off pretty aggressively. It's already starting to grind back, and you got to be careful with this, because the euro probably crushed a lot of longs. Now here's the thing: if I wanted to short like the euro, if I was like looking at the euro going, well, maybe I'll just short the euro dollar instead. I may be looking at a pair like the euro yen, and the reason why I say that is the euro yen had extended to 161% extension. We're stalling here, and this is where you start paying attention to the stock market, because if the stock market does start to show some weakness, maybe that euro yen is prime for a little bit of a pullback. Or maybe you can look at the euro pound and realize that the euro pound just hit. And here, let me get rid of this. Get rid of this here. Get rid of. I didn't want to do that, but let me redraw this. So if you take the high here, the low, you notice we just hit the 618 retracement on the euro pound. So your risk is really well defined if you're trading, like, let's say, the euro pound, or if you're trading maybe the euro yen, and that might give you some other opportunities, to say, okay, well, I don't know if I really want to short the euro dollar, but maybe I want to, maybe I want to short one of these crosses. Like I said, the euro pound, I mean, it's got a very, and I'm not short, by the way, but it's very well defined right now. Like,
and it barely made a new high with the blowout move in euro. It lacked the same kind of momentum that the euro had.
Yeah, it just hit a new high above the 618 and then reversed really hard. So now your risk is basically above today's highs. Yeah. So if you can look at that and go, okay, well, my risk is above today's highs, and maybe I'm targeting back at 86. That's a good risk reward to be on the short side. So there are some other opportunities, especially if you're not really too sure what to do with the dollar. And I'm in the same camp as far as, okay, what do I do with this dollar? The dollar looks like kind of messy right now, and I'm trading.
It's a lower beta. It's a lower beta euro short. Is the way I look at it.
Yeah, it could be, but you also have to keep in mind that we have a bunch of ECB, or a bunch of central bankers that are about ready to talk.
I know.
Which you've got
whole crew
speaking,
except
Yolas, Carney, Kuroda. They're all speaking at the ECB. I think it's an ECB like roundtable or something. It's a forum.
I think even Volcker and Greenspan are going to talk today. I'm just kidding.
Got a bunch of the old hats coming in, but no, it's like a big, like Lyceum for them all. So it's, they're going to go ponder, monetary policy in a roundabout forum. So it should be, whatever, it should create some volatility. So that you have to be a little aware of if you're trading like the euro pound. But all in all, I think the stock market is really walking a fine line here. I do believe that if you look at the S&P, I think we're, really, just got to be very careful here. And then, the dollar, I'm not really too sure what to do with. And also there's a couple comments that people are asking, or questions that people are asking. So I figure I'd take a few minutes just to answer some questions, because I don't normally do. John asked if I could take a look at the U.S. dollar Mexican peso, right. And this is the peso right here, and it is in a descending wedge, and it's still in a descending wedge. And 1805 is like the key resistance, which comes in right, it's the highs from basically yesterday, and we're already sliding back into the apex of the wedge, but it is the apex of the wedge, meaning that it is very volatile. When you're in the apex, the whipping around is obviously it's very, very tough to deal with if you're trying to be directional. But at the same time, I think a breakout above 1805 would be very bullish. 1805, 1810. And we might get a dip. Sorry, like I said, I'm sorry, I'm yawning. We might get a dip down to new trend lows before reversing as well. That's the problem with when you're in a descending wedge like this. You could very easily do this. Right. And then reverse. So, right. You just got to be a little careful here with the U.S. dollar Mexican peso.
Like, I wanted to just ask you what you thought. You showed that candle in the euro. We saw what happened. We saw what happened in silver on Monday. Does this speak to like some type of structural issue with some of these markets that, there's like big air pockets, huge, you'll trade quietly, and then all of a sudden there's like a raid, so what do you think of that? I'm seeing more and more of that. That's making it tougher for guys like you were saying, that were possibly they were long, they trailed stops, and they cleaned out every silver long that had stops under the lows from months ago, and now, a buck above where that happened. Do you have a feeling, you have an opinion of that?
That's a good question, Dale. And I think, the guy that you had from Oanda yesterday, I think he had a great answer for that. First of all, it's summer trading, so the liquidity is pretty poor. So that's like a major issue. Excuse me one second. I gotta sell this. Okay. Sorry, I just had to exit something really quick. What was I saying? Oh, the liquidity.
So summer markets, less players, less liquidity.
That's a problem. And then on top of that, I think these central bankers are really trying to engineer. They're really trying to engineer prices. And I don't know if silver was a result of that, or that was just a really big sell order. But regardless, I think that there is some. There's obviously some.
It's not normal.
Gerrymandering around. No, it really is. There's a lot of meddling in the markets, and like those comments when it comes from an unnamed source. I mean, come on, that was basically the ECB's way of trying to jawbone the euro lower, right. Because the euro. Keep in mind, guys. I mean, the euro has gone from if you just look at the last few months. Just all, since the beginning of the year, we can just do it that way. We've gone from 103 to 113. Yeah, I mean that's a
they're exporters, less the buyers of Mercedes and BMWs.
That people like they're big in tourism. On a lot of the whether you're talking about France or Greece or Italy. I mean, so a 10% increase in the euro exchange rate. I mean, it's gonna start hurting the economy. Just as the economy is starting to do a little better. You can see a lot of the PMIs have been really improving. I mean, you can unwind all of that if the euro starts trading up towards 120, and then Germany is going to really start feeling some heat. So. I think this is a way of them, talking down their currency as much as they can. But the problem is that, yeah, absolutely. Hey, Stelios, how's it going?
Hey guys, I'm fine. I just want to say one thing. I don't know if it's scary to other people. It scares me when I see this kind of micromanagement that they're doing, with communications and how central banks are nowadays affecting so much, pretty much every single market. I don't know. I mean, I might be crazy here, but it just scares me. It didn't used to be like this 10, 15 years ago. So I just look at these things and sources, like you say, it's always sources. There's no name or anything. They come out, they say something, they look at the market moving momentarily, for a day or two, and they come in and try to correct it. It just scares me. I don't know. I just felt like I have to say that.
No, it is scary, but one of the things that I would have to agree with you, Stelios, and one of the things that is even more scary is the amount of liquidity that's in the market, and they're trying to manage that. I mean, if you think about all the money has been pumped into the system, whether it's the Fed or the ECB or the Bank of England or the Bank of Japan, you have all this excess money sloshing around the system. They're trying to manage it now, and the scary thing is if they can,
how about this, guys? The open outcry is gone. That's for the stock market when no one's there. It's all machines, but. How about the fact that all the scandals with the banks, they cut back on their trading departments, including FX. There just aren't as many players there. there aren't as many in the bond market. You know, the internet and the new model made it really not worthwhile for a lot of people to stay in the business of market making.
Hey, good morning,
Yes.
my friend.
Hi,
Steve
how are
here.
you, Steve?
Good morning, Blake. Good morning,
Hey,
Stadia.
Steve.
Good morning, everybody.
Good morning.
You know something, one way or another, you know, we keep regulating banks and, you know, their activities. And as you said, you know, a lot of things have changed since the previous financial crisis. But you know how banks are. More or less through lobbying, through participating in decision making, they always find new loopholes to create revenue. There's no question about it. And you know, plenty of that is actually, you know, questionable. But it is what it is.
It is what it is, and so the markets are dealing with it. But we are, I think we're when we talk about like you know, the comments that come from whether it's the ECB or the Fed or you know or you know, quote unquote officials, it is the way of central banks trying to manage everything, and because they have to, because they've created a monster, and so they have to manage it, you know, more so than you know Stelios, because I remember years ago, and me too. I mean, you never used to have this, you know, 10 or 15 years ago, but the balance sheets of these yeah. Were much smaller, of you know, not only central banks but of you know, sovereign nations around the world. So. You know, it's becoming a monster that hopefully they can contain, and I think they're trying desperately to.
It's like trying to contain the ocean, though. I mean, you might do it, you know, in the short term, but you know, when a tsunami breaks out, actually, there is absolutely nothing you can do, and that's why right. I'm afraid that we're going to be jumping from one financial crisis to the other, because if we suppress the normal business cycle and we don't, they try to suppress. You know, normal recessions from manifesting, you just prolong the inevitable. But when that happens, it's just going to have stronger effects than it would if you if you let it make its cycle and come when it's supposed to come. Actually,
bottom line, we trade the game we got.
Yes, and there's no question about that, and that's why that's why we're here. Actually, we need to check what we have in hand and what is tradable and what it isn't, and what present opportunities, and you know, hope for the best. Although with the way you know, the system is being regulated, as I said, I really believe that we're going to be jumping from very calm volatility conditions to a financial crisis and back to it, etc., etc., etc.
Well, hey guys, I gotta get away from the but Steve, right, do you want the chart? Blake. Thank you, guys.
Great review, bro. Good luck on CAD, Yen, and nice, some real nice looks this morning, Blake. Thank you very much.
Thank you, gentlemen, and you guys have a great one, and I'll see you guys soon. Thank you.
Oh, and Blake, I have a legend for an interview. Legend.
Who's
Walter
that?
Vanelli is a legend.
Okay, I will be listening.
Walter Vanelli.
All right.
He's a legend, man. If you want to know what banks do, he's been with so many banks. Anyway, that'll be a great interview. It's awesome. Taken me a long time to get Walter. He didn't want to do it on FX Street, but we got him here in face.
That's awesome. Okay, I'll be listening in at least part of it. All right, thanks, guys.
Okay, buddy. Stevie.
Hey, Dale.
So.
Okay. What do we have today? What do we want to see? First of all, I just happened to fall across a comment about USD CAD. I think. Yeah. I think we more.
You guys, yeah, the FA had the low, possible low here. To me, it looks like, you know, like 2 drives.
Yeah, more or less. You know, USD CAD has been so clean. I mean, after reversing from this channel, it gave us, you know, a textbook bear flag.
It's done nothing
broke
right.
Down.
Nothing right.
Gave us a second textbook bear flag, A, B, C, another break lower. So the question is, what happens from here? First of all, the confluence we had of the 100% extension, like in essence a possible ABC, and the 78.6 of this move higher, failed to hold. It rejected temporarily yesterday, So that was enough, to yield a, let's say, roughly 50 pip pullback. But obviously we're penetrating below it today. As you remember my chart, I haven't changed anything here. The next target, in my opinion, is down here. It's roughly 130, because we had the previous bottoms here. A little bit higher, we find the 127.2. But I wouldn't give so much weight on that as a possible level, but this is the zone I'm interested in watching at the moment. Obviously, if you're still holding USD CAD shorts, I think the risk reward is very clear now. It's above this flags high, which is also the 200 EMA. It's actually the level that rejected us. So roughly your risk is now at 133.50. As long as the pair trades below there is absolutely nothing bullish to it. Obviously, nothing moves in a straight line. At some point, we're going to get a rebound. But until we do, you can just keep trailing your stop loss, and everything looks good so far. So
you're
asking here if it's stress.
You're like a raging bull, man. What a raging bull you are today. Go ahead, bud.
And since we're speaking actually about the USD CAD, it's as usual, it's a good idea. You shouldn't be forgetting to always have a look at the big picture, and the big picture is this.
Yeah, 122.
This is a big break lower. I mean, we were monitoring this ascending channel. We broke below it. We're now monitoring, I was monitoring this internal trend line because it passed from those highs, from this low, from that low, from this low. And last week we actually stalled there. We created a pin bar, and this week we were clearly breaking below it. So looking from the weekly perspective of the chart, I would say that the next level I have on the weekly chart is 128 actually. It's, you see, this zone here. So anyway, look at USD CAD, until proven otherwise, it remains bearish. Okay. Okay, that answers, I think, the question of our friend about USD CAD. Gold and silver, the usual lover of many.
I'm watching, Steve.
You're watching carefully, right? I should be careful with what I'm going to say.
Go ahead.
Okay, let's have a look. Okay, this is what we had. Obviously, despite this week and this strong day lower that we had, the general case remains. There's a possibility that gold is in a flat top triangle. We've managed to hold once again. We didn't actually test it. We came close to it. This ascending support, also the 200 EMA. On the other hand, we're still capped by this zone, so I would say that I remain neutral on gold. I cannot be bearish until we break below this.
How about this, guys? How about this? As weak as the dollar has been, don't you believe that the gold action has been disappointing? The metals action has been disappointing in the light of an extremely good dollar. That's what I'm thinking here when I look at this chart. I go, why isn't it trading 1,300 now with what the dollar did? Anyway, that's just from it's just a view from a tape watcher, old man with I have that tape under a glass on my table, a ticker tape, and that's how I trade the market, with a ticker tape under glass. From 1929. Everyone should have one.
You're absolutely right. You're absolutely right. I agree with you. On the other hand, some other elements that would help gold, cut some bid are missing. We currently remain in an environment that has low volatility, so mostly, it's a matter of rates. And yes, obviously, seeing it in the context that this is a US dollar cross, yes, we would expect more strength. There is no question about it. The double top, the possible double top rejection from here is definitely not bullish. I mean, it's something that points lower. But on the other hand, we have not actually managed to register a lower low. So we did see a double top, but we have a lower low in place that would solidify, a breakdown. No, we don't yet. So we cannot be overly bearish. So it's like more holding a neutral position and, having a look at the major levels that will actually give us confirmation of what's happening here with the metals and what the market intends to do with them. Silver is a more extreme example because actually silver managed to, to clean, obviously, almost every stop loss that there was out here. Technically, it actually made a lower low with that crazy move like a couple of days ago. Currently, it's testing again the 1675, call it roughly, zone. Unless we break above it, it's not bullish. It's not bullish anyhow in the short term. Having broken above this channel, obviously we cannot all be overly bearish as well. I mean, we took a long position up there, down here. We actually covered it up here. We were taking people over, of how we were trading this every day. But currently, I'm not convinced with silver. I'm not convinced to position myself either side. So, you don't need to take a trade when, yes.
Sorry, mate, just want to add, people probably know I'm a little bit biased, but it is making a pretty decent weekly candle so far. It looks like a pretty, pretty powerful hammer.
Yes, because of the wick.
So,
yes,
because of the wick, yes.
Yes.
So,
and because of the wick, Stel, because of the wick, and because of the euro spike, and because of the fat finger in Amazon, and because we're in summer markets, this is what I want everyone to remember and write it down. Use less leverage when you trade the markets. Use wider stops, let your trades breathe, so you don't get picked off. If you don't use less leverage and you're caught in a spike, you'll probably say yikes. Oh, yikes, yikes, yikes. What do you think, huh? Use less leverage, my friends.
Absolutely.
Your favorite song, and actually for a good reason, I have to add to that.
All right, man. All right, let's get back to business. Stop,
Oil.
Stop throwing around, Steve.
Crude.
Right.
Divergence persists.
Great call
on white today.
Yeah.
Thank you. But honestly, it was an easy call. Why? Because I had the confluence, I had those levels back in place, and in combination with the fact that we were very oversold, and it was more than obvious that sentiment had started being extreme. I mean, I had at least 3 strong indications that oil would soon yield a rebound, and this was the perfect level. We had the channel
support.
Where do you think
it's going?
We had the zone.
Where
I can tell you one thing for sure. I more or less am a believer that we're going to test 45.31, which is the low we found here, and also the lows here. So I believe that 45.31 is, a very, very likely scenario to be tested, and we see what happens from there, because we need more price action to judge what kind of a rebound is this.
Maybe that's what drives Canada down to your next major support level.
Very, very likely. Very likely.
It's like Canada ignores oil weakness, but it pays attention.
But on the other hand, it plays ball with strength. Yes, you remember that we had said that exact thing. We said, okay, Canada is ignoring oil weakness. What is going to happen when actually oil reverses? You had actually said that, and they told you, yep, that's the point actually. That's why we're looking for. That was one of the reasons we were looking for more.
Guys.
Hey, Blake.
Hey, did you see the sell-off in the euro pound? The pound's ripping. Hawkish.
Yes.
Carney comments. If anybody shorted that while we were talking about it, they're up a quick 60 pips. All right, I gotta go. Bye-bye.
Nice, Blake.
Blake, give us a bank account so they can deposit your part, mate.
See, he can't call you Freebie Steve anymore. I mean,
yeah, true. What the hell?
I'm just curious. Did anyone short euro pound on Blake's call? He doesn't like me to ask to see, but just curious.
And
Okay.
if you did, I think at least 10% should go to Blake.
Yeah, at least.
Okay.
All right. Or they could take a buck and try a trial.
You know something? I really don't like this pound. I really don't like this pound weakness, and I'm going to give you a bad reason for it. The reason I don't like it is that actually I started writing a blog post just like an hour and a half before the webinar about the reversal of euro and pound crosses. But unfortunately, since today we started streaming live on Periscope and YouTube and Facebook, we needed to run some trials with Velo, so I had to actually pause posting it to finish it after the webinar. And now they will have moved more. I have to take new charts, etc., etc., etc. But regardless, pound played ball. I didn't want to be along the cable because I thought there were better opportunities out there. But if you remember, that's exactly what we had drawn here, a retest of these levels and a rebound, and that's exactly what we got. And we're actually now getting a break above 128. That was an important zone several times. Yeah. And the fact that we're so comfortably penetrating. Yeah.
I thought we were going to get one more shot down to like 5.5. This surprised me.
As it seems, Dale, it looks less and less likely that this is the case. And
oh yeah, that's gone. That's history. That's not going to happen.
Yeah. From what it seems, you can kiss that opportunity goodbye. But there are still opportunities like here. You remember that we had seen in a 4-hour chart the inverted head and shoulders formation yesterday, and actually when we had happened. Yeah, when we had seen it, we were exactly testing the neckline, exactly. And they said that, listen, a break above here, if I remember well, the target was 170.70. And we said that coincides is within this horizontal zone. So obviously, this remains valid.
How about this for a big picture, Steve? Double bottom in November and April, left shoulder in August last year, and we just formed the right shoulder with the neckline at the high.
Sure.
That's
sure,
the way
that can easily be the case.
Or cup and handle.
But any way you look,
it's bullish.
Any way you look at it, Dale, because as I said, I always like to see the big picture first. Yeah. What do we have in pound Aussie? What do we know in pound Aussie? First of all, we know that it rallied, starting 2013 March up to September 2015. So this pair was rallying for 2.5 years, almost non-stop. Then what did we get? Okay, we got a descending triangle. Then we broke lower. Then we retested the channel because the move higher was in the channel. Then we created a wedge. This is a descending wedge. It's a very, very bullish pattern if you actually reverse above it. And then what did we do? We broke above it. We came to almost retest the lows, and then we impulsively ran higher again. And people that have been watching us since some time ago, you remember how many times that we reiterated that we expect the move lower from up here to be corrective. And we kept looking for a bottom. We said that this is the first zone that might yield a bottom. It didn't. Then we were watching this zone, and actually this zone worked. We only penetrated through it for a single day, like for less than 24 hours. We ended up holding it. We created an inverted head and shoulders. If you look at it in a 4-hour chart, or a 1-hour chart, it's more than clear. And now we're moving higher again. I believe that we will definitely test this zone. I mean, it's a matter of when, how fast, not the if, in my opinion. And I do believe that this is going to yield a move higher. Actually, this is one of the pairs I am covering in my blog post, which is going to be posted within a few hours from now. So pound kiwi gave us a key reversal yesterday, continuation today. We're currently within a strong zone, but I really believe that that's going to give us an opportunity to
go on at least your green moving average, buddy.
Yes, and you know something today, and that's what I was actually going to write.
Right.
You see this little zone here. If we go to a 4-hour chart, you can see it, more cleanly. Yeah. We almost tested this zone, and actually, what I was writing in my blog post is that a retest of 175.30 of that zone would be a great buying opportunity. We made it to 175.50. Boom.
Yeah.
That's it.
Yeah.
This is looking very bullish at the moment as well. Same if we go to Euro crosses.
Except for EuroCAD.
Let's have a look at them. Yes, except for EuroCAD. Here we are.
Yeah. Failing, we're gonna.
We almost got a retest of an interesting level today, and Euro Kiwi.
Failing.
Here we are. That was a huge reversal here. I think that any retest, we almost got it today. That's what I would be writing actually. That any retest of 154.80, because we had some lows here, we had this high here, and if you go back, it's a level of interest.
Filled the gap.
Was a good buying.
Gap it's one of the few pairs that filled the gap.
Yes, correct. Here, yes, absolutely right. You're absolutely right. And it was, very well behaved. It was channeled, and when it broke the channel yesterday, it didn't do it in a way that makes you think like, yeah, it broke the channel. It doesn't seem, to be so decided that this is an actual break. No, it gave us a key reversal and broke the channel very decisively. So in my opinion, if we see another pullback to even 154.50, it's a gift. Honestly, at least, I mean, I'm not saying anybody what to do. I'm saying that me personally, I will consider this FX God's gift. You know what I mean? I really want to get aligned with this because I'm already long Euro Aussie since last week, but I would really want to get some exposure with Euro Kiwi.
I think that in order for them to cooperate with you, you have to make a sacrifice to the FX God. So do you have any winning positions right here? You have to liquidate a winning position for the FX gods to accommodate you. You have to make a sacrifice.
Oh yeah, actually, I have some. One of them is EuroCAD actually. Okay. I have already taken profits of half my EuroCAD when we touched this low here.
Okay, you made your sacrifice to the FX God.
The other half of my position is still on, and today most probably I'm going to trail my stop loss above today's high because I see this candle. We already have an outside daily candle, so if it closes in a bearish manner, it's most probably going to be at least an A, B, C. So I'm most likely expecting more weakness, and I want to hold the other half of my position as long as we respect today's high, because to be honest, yesterday I came very close to closing the other half of my position, which was still in the money. The only reason I didn't do it because I have this strong zone here. Yeah, actually it was, you remember we were monitoring this ascending wedge for some time. When we actually had a break below it, I already had an order to go short, and I didn't actually have to do anything. The plan was already in place, and my platform just
they may play games with that candle and even trade up to 50.5, 51, but I still think it's a short that's going to fill the gap, just like the Euro Aussie did. But,
something. If if it's still a good short, I wouldn't want to see a new high, because look at this. I have an A, I have a B, I have a C, and where did we get possibly the end of C?
Yeah.
At a zone that was already marked as a zone of interest, right?
Good point.
So I like it to reverse from here. I really, really like it to reverse from here.
Okay.
If it went higher, I would be really troubled. Reversing from here, I'm very good with. I'm comfortable with. I'm holding the other half, but I'm probably going to trail my stop loss, somewhere here. I don't want to see, because especially, just consider today's candle. At some point, today's candle was a bearish engulfing, but it was a bearish engulfing on top of a long candle. So engulfing, fully engulfing a long bullish candle like the one we had yesterday is not something that you see every day.
I'm just saying precision trading in this environment with the algos chopping highs and lows for liquidity, that it's hard to try and be perfect on that. So, I mean, just because...
I agree with you, but on the other hand, you have to have a plan somehow, huh?
Yeah. I mean,
I agree with you, but you have to have a plan.
Takes it out, maybe you'll recommit, get a better price above there. So who knows if it does that.
Yes.
It makes sense.
By the way, you remember we talked about it some time ago. You remember that I said that there is nothing I see that is bearish with euro yen. In my opinion, what is happening with euro yen here is quite clear. You remember that I've said many times that I'm not a believer that USD yen is also going to move lower. I'm not long, but I like it long. I really believe that what we're getting here is a new 5-wave move higher. Why I believe this? Because we had a 5-wave move higher. After another impulsive move higher and a corrective move lower, we had another impulsive move higher. We had a clean correction that was, from a basic technical analysis perspective, it was a pennant. You can't get it more clear than that. This is a pennant, end of story. Pennants are continuation formations, as we've said about triangles, as we also saw in the Qs example. We've had a pennant, and now we had a 1, a 2, and I guess there is nobody that can doubt that when you see 250 pip candles, this is an impulsive move. So I'm expecting that this is part of a third move, of a third wave of this new move higher. So let me repeat, I know that a lot of people are looking at it and they're like, okay, this is a strong move, I'm going to fade it. Perhaps all the fade you're going to see is this. Unless I see a move below 125.60, I do not believe that this pair is bearish any way you look at it. I mean, there is no amount you would pay me to be short euro yen at the moment. I don't know if I can get more clear than that.
You like that?
Okay, let me consider that.
All right, buddy, I'm going to take a quick break. Walter is in the house, and everyone stick around to hear Walter Vanelli has no axe to grind. I don't see a service he's selling. And should be a great interview.
Okay.
I'm just going to take a few minutes to get ready for it, Steve. Thanks again for great views and sharing your analysis.
Perfect. I'm going to explain. Some people are asking for more pairs, so I'm going to also show Euro Pound from the perspective that actually Blake was seeing it. I had this zone marked here as exactly Blake had, and since this was a triangle, I expected a move higher before lower. Actually, we drew that, I think, even yesterday it was. So I expected a move higher and a move lower. Actually, we did get that. If you zoom in, we did register a new high today. I mean, we actually surpassed this high at the beginning of the triangle. So technically speaking, we did get a higher high. Now you can never know exactly, how high the new high is. We were saying that perhaps 0.90 being around level will attract. And for the time being, what we seem to be forming is an outside bearish reversal. So depends on how we close, because you never know. This is a daily candle. But from what I see now, I think that it's very likely that that's all we would see, and now we can expect a move lower. Now, where that move lower would be, an interesting level to watch to begin with is, let's draw some fibs and make some decisions here. There it is. Okay, I had a zone here already, and I wanted to see the fib overlapping it. You can see. No, it's below it actually. So this zone here that coincides with the 38.2, which is at 86. Let's call it roughly 86.50. I think that's a first level for us to watch for a possible rebound. So I do believe that a move to 86.50. At least to 86.50 is within the cards if today's price action confirms this reversal. So, you know, this position of mine is valid as long as today's close confirms the reversal. I believe that we're at least going to see an 86.50 retest. So keep that in mind. Kiwi, a friend of ours wants to have a look at Kiwi. Okay, Kiwi. Key reversal yesterday. We're seeing a retracement today. That retracement is not enough yet to invalidate yesterday's key reversal. So as long as yesterday's key reversal is not invalidated, I would still not be long at current levels. No way, because I find it more likely to see something like this. For a corrective move lower. Now, how far this corrective move can take us, you know, it depends. Let's confirm it. Let's see what happens today and tomorrow, and then we're going to draw some fibs and see perhaps 71.50. So something like this. But we need a little bit of more price action. Dale, I hear you're back.
Yes, I'm back. Okay.
Okay.
So it looks like.
So I'll leave you to your interview. Thank everybody. Tomorrow we're going to go.
Go ahead, buddy. I didn't hear you.
Yes, Dale?
I didn't hear you. What did
I just want to thank everybody. And
okay.
And tomorrow we're going to go through the rest of the charts, you know, that they're asking. And don't forget that, you know, if you're a subscriber at ForexAnalytix, you obviously have constantly access to our analysis, to our intraday updates, to our patterns in play. Because, you know, there are so much we can cover within a webinar, and still the webinar is taking place for 1.5 hours per day. The rest of the hours, you know, price action might change our minds, our opinions, or might give us more information on the market. Okay, thank you very much. Enjoy the interview, everybody.
Okay, thank you very much, Steve. Everyone thanks Steve for his hard work. He's one of the hardest working technicians I know. In fact, they all are. I mean, Blake. So FA, they live and breathe it. They live and breathe it. Glad you followed us here. Walter, how are you? I'm now going to make you the presenter, and looking forward to hearing your voice for the first time and talking to you for the first time. S&Ps are fading, guys. Hello, Walter.
Hello, can you hear me?
Hello, Walt. Yes, I can, Walter.
Hello, my friend. How are you? Finally.
What a great day. I finally get to meet you and hear your voice. You know, I've been following you on Twitter for a long time. You're well loved.
Yeah, indeed.
You're very well loved in the Forex community, like me.
I appreciate very much. I appreciate very much, my friends. How's everything?
You know, so, you know, I read your bio, and I took a look at your interview a little while, I don't know, maybe a week or so ago that you did with Hugh Kimura, who I've interviewed before on Trading Heroes.
Can you see me now?
Yeah, I got you. You're on the screen right now. So, all right. So I would say it would take me less time to list the banks that you haven't been with than to list the banks that you have been with. Yeah, I mean,
I had a great opportunity on 1982, but honestly, I went to the bank in 1981, And before to go to the dealing room, I went on the back office
Right.
for 1 year to learn accounting.
Okay. Interesting. You know, my first job in the business was as a runner on the floor, okay, at the CME, where, you know, we would get orders over the phone from different branch offices. It was Dean Witter, and they'd write them up, or we'd get them over the teletype, and I'd run them out to the pit. And that's when I learned about stop running and stops. I noticed that every time I handed an order to a broker and it had STP at the end, they put it in a certain part of their deck, and they were very interested.
Well, my first work in dealing room after 1 year of the office was as a position keeper. You know what I mean?
Yes.
So yes, I sold at this price, I bought at this price, calculate the average immediately, guy. But was a very, very good school, because I started from the first bank, from the first private bank in Italy, was BNA, and now actually is Monte dei Paschi di Siena.
Okay.
Then I worked.
Go ahead.
Then I worked for Citibank for a couple of years.
Yeah.
And then for a bank in the Swiss bank, now I think is Party Boss.
All right. Well, you know what? I have a question.
Yes, tell me. Here I am.
Well, you have a lot of experience at banks. Banks have trading desks. You oversaw the trading desks, okay, and your traders. How did you know when someone that was under you, that was a trader at the bank, had talent to become a good trader? What qualities did you see in them?
Well, first of all, one of my mission when I'm going to mentoring with the other students is to explain them what happened in the dealing room. Because if you enable to know what happened in the dealing room, you enable to control the market. I mean, you can use the technical analysis, of course, and to understand the bias, fundamentals, and it's okay. But to stay in control of the market, you should know what happened in a dealing room.
Okay.
Something like arbitrage, for example.
Yes.
I had as well a good experience with me to work in the pit during the lira fix on the stock exchange for 6 years, from 86 to 92, in the name of my bank, of course. And was a very, very good experience to understand the arbitrage and how this works. Because, well, actually on platform, we are unable to work on arbitrage, but thanks to the control of the arbitrage, we can have the exactly more or less more than 90% where the orders are.
And were you really working the spread? Wasn't the profit on the arbitrage the spread between the bid and the offer at different dealing desks? And that's where
well, for example, actually, I am seller and top on Euro-dollar, but there is a reason. It's not the fortification of euro versus dollars.
Okay.
It doesn't mean that dollar is weakness or the euro is too strong. We have two different situations at a time. Situation number one is an internal war in Europe after Brexit between Europe and Great Britain. But we have another situation, so that someone, big company, and as well, hedge fund, still working to diversification of portfolio. In fact, the euro dollars moves up at the time, apart Yellen speech or Draghi speech, is moving up only to buy euro versus sterling or euro versus yen. This is exactly proof that the market confirms dollars, US dollars is not weakness, but we have a strong euro because someone is diversification portfolio buying euro to invest in Europe. Okay. This is my opinion. This is my personal opinion. In fact, if we see, I prepare for you some screenshots on weekly, we can see that on weekly, euro dollars trend is up, but meanwhile, euro sterling dollars is down, is moving down. Right. And as well, dollar yen is moving up. So which is the sense? It's an anomalous movement, don't you? Because yes, if dollars is under attack, we have euro dollar moves up and sterling dollar moves up and dollar yen moves down. But in this case, we have the market in anomalous position. This position means that someone is changing the aging of his portfolio. That's what I mean.
Okay, so it's really a flow out of the dollar into the euro.
Yeah.
That's what's driving the market here. If you want to put up your screenshots, we could talk about them that you prepared. I'm seeing your screen. I see your screen right here, and I see you have Euro USD pound.
Oh, you see my screen?
Yes, we see it.
Okay. Give me just a second to understand how can I show you. This is the euro dollar weekly. Okay, can you see the euro dollar? Yeah, yep. This is the euro dollar weekly.
All right.
It's clear that the euro dollar is moving up at the time. Right. So bias of euro dollar is up on a medium period, of course, because I'm not a bank. You know, the bank moves with constancy, taking a look to 3 months and 6 months. But in this case, the available of weekly is the bias is up.
Yes.
Yes, the balance is really up, and eventually a break above 114 and 114 and 05. Next target should be around 115 and a half. First target.
All right.
First target.
Okay.
But let's go to see.
We're heading towards those March highs. All right, go ahead.
This is the situation of cable.
Okay.
The market moving down. This is the first anomalous movement if we consider the dollar is weakness at the time. Because we have a situation of dollars that is strong versus cable. Yeah.
Okay. That's why euro pound has been such a big winner on the upside.
Yes, you got it perfectly. The market moves because the major orders at the time, and you know better than me that the order moves the market, are to buy euro versus yen and sterling.
Got it.
This is the proof, because if I try to and this is the dollar yen. So we have an anomalous situation, you see what I mean? So the dollar yen.
Normally if the dollar's weak, US dollar yen would be going down.
Yeah,
that's not happening.
That's what I mean. That's what I mean. This is the result that and the proof that euro dollars at the time is higher because found or big orders are to buy euro versus sterling and yen. And this is the right proof because this is the personal, just my personal view that the market is moving only on orders to buy dollars and sterling versus euro, to buy euro versus sterling and yen. This is the situation.
Yeah, it's been a tremendous move, euro yen. It's been
because we have because we have the opposite situation.
Right.
If the dollar is under attack, we can't have a long period bias up on dollar yen. Or dollar yen, just my personal view, is one of the most important indicators for dollars. That's what I mean. And today as well, just a couple of minutes before, I have seen a very, very large sell about euro sterling.
Yeah, we sure did. Yeah.
Yeah.
Earl Blake talked about it before it happened.
This is my platform, but as you can see, what happened, this is the situation. This is euro sterling.
Right.
Take a look.
Yeah.
Moving down to re-arbitrage. Meanwhile, we have again euro dollar on top, but euro dollar at the time is supported, of course, because someone, just my personal view, is buying dollar versus yen. Okay. And this is the result.
Okay, is that a carry? Do you consider euro yen risk on, risk off when it comes to correlating it to, say, risk assets like equities, euro yen?
Well, I think euro yen now at the moment is manipulated from BOJ. This is just my personal view.
Okay.
So I think yes, yen is under attack, but just for liquidity and can push down stocks. So there is a good opportunity for funds to buy stock exchange on Japan on the bottom.
Okay.
That's what I mean.
Okay, so that is more positive for the Nikkei than for other bourses. Is that
Yeah.
right? Okay. Yeah. All right. So look, Walter, you know, with the experience that you have, I noticed, I wasn't sure you had that, but it looks like you have a mentoring program. So you're still out there. You're helping people.
I have a mentoring, yes, but I consider my mentoring as well to the low price a sort of mission, because sometimes I do not like to see people lose money.
Yes.
Because, you know, many people think that is a sort of game. They open an account, they use a platform, they study something about analysis, and they try to trade using the maximum leverage to change their lives. But it's the opposite. Because
done it.
I've done it.
Did you ever do it to yourself? Did you ever do it to yourself? You ever blow up an account?
Well, first of all, I'm proud to say that I mentored trader since 1987. I mean,
Wow.
I start to mentor trader in a dealing room.
Right.
Newbie and junior, you know.
Right.
And I never failure in my life. This is my personal target. And I'm so happy about that because a lot of people think to trade on market is a sort of competition. But it's not raising. Because if you think that in a dealing room, we work like a team, we need to share our opinions. No, if I sell, you buy because you do not understand market, whatever happened on the market, or is competition between me and you, who earns more. Because if we consider to be
that's the egos.
Yes, to trade as a sort of competition. Remember, as I used to say to my students, only the turtle is the winner, because the more you are constancy on your profit, the more you will be a profitable trader.
And so, you know what, you could be a commercial for our company, because we believe in having a social trading community and the sharing of ideas. And our company, ForexAnalytix, are 5 traders that on their own would be great, but collaborating, they're better. So you're a big believer, even though you wouldn't need anyone to talk to, that you do intelligence gathering still. Are there guys from your career that you still talk about the markets with from your earlier days and relationships that you formed?
Well, first of all, when I mentor someone, I am in touch with him for the rest of the day. At the end of the mentoring, I didn't say, okay, good luck and bye-bye. But I always ready to help them, just for refreshing, or if they have some problems on P&L, because it's important for me. Because as I used to say, you want to be a trader, you should think like a trader for first.
Okay.
And if to trade is a work, and to be a trader is a work, to trade is an art. So we have different techniques during the day. So we can understand how to control the market, because the more you are able to control the market, I mean your position and your risk, okay, the more you avoid to be controlled by the market.
I think it's interesting that you say that once the teaching aspect of trading is over, that it's not the end of your relationship with your mentees. So
yes,
mentoring is almost like being a parent, Walter, where it's you know, it's a lifetime thing.
For me, it's important in a relationship, because I have all my students on direct message, on Twitter, on email, by email, Skype, and WhatsApp as well. Because in any case, I'm always ready. If they need an help, here I am.
Okay.
You know what I mean?
Yes,
this is important. Never, because to trade is a work of team. To be a trader, we need to be sure of our opinion, don't you? It's not the personal trader that think to be a solitary trader. Start with the left foot. That's what I mean. It's very, very important for me to maintain my relationship with all my students. In fact, 90% of my quiz are for my students.
I see. So that's a major way for you to...
As usual, because I use the trading range, and I explain them how to calculate the trading range. What is the trading range? It's not my invention. Because when I start working in a dealing room in the day, I should be able to put to the market in interbanking or to the customer immediately a price if they ask me. I have no time to reflect. I have to follow the market. And of course, inside the trading range, I close back to back because it's not my position. Eventually, client that sold or buy, because it's not my position. But I use, in this case, as a retail investor, the trading range like a sort of a neutral zone. So inside the trading range, only the banks works. You sitting on your hands.
Okay.
Outside the trading range.
They collar the range, but the big, the chance for retail traders to make money when in a range is, no, recognize it's a range, but the big money is made when it comes out of a range.
Yes, indeed. That's what I say. Okay. Because if you work inside the trading range, and for example, you don't know what happened in a dealing room in case of financing, and I have to buy 50 or 100 million euro versus dollars, and you are short inside the trading range because the bias is up. With all my respect for Mr. Fibonacci and company, I move the market up. Okay. You take a stop loss, then the market moves on your side.
Okay, and do you avoid forecasting, and do you think it's okay to have a bias when you're trading?
Well, usually I use the same system, me and the student, to calculate the budget, because if you enable to calculate the budget, you are not a professional trader. You can't trade without the budget.
Got it.
So I use the same system of the bank. So I work on quarterly, and the maximum stop loss will be limited in 3 months, to 1/3 of the capital. This is the formula that the bank used.
Okay, that's a pearl. So Walter, go ahead. No, go ahead. Go ahead. So,
well, because if you open an account, just for example, with $20,000, and you start to trade immediately using a leverage of 100, 1, 2 lots.
Yeah, it's crazy.
Over your limits because you are unable to control the limits. You should be able to control the limits first to calculate the budget.
What type of leverage you recommend your students trade with?
Well, I recommended a leverage calculating the formula. For example, just to be easy, for $20,000 capital, the maximum leverage in this case is 40,000
2 to 1
euros.
Okay.
Because the more you push on the gas, the more your provider is happy. But if you calculate that you have $20,000, your maximum daily stop loss is limited at $110 a day. So with $110 a day, your maximum leverage is 40,000. And your stop loss is limited if the price back in range.
Okay. All right.
For 6 days.
Yeah, so conservative. And
the reason is,
do you have a rule for stop loss per trade?
Yes. all is calculated, my friend, because
Okay.
Outside the trading range, I use the action price techniques. But if the price back in the trading range, I close my deal in 6-8 pips of stop loss. I'm talking about day trading, of course.
Okay.
Well,
Do you have, is that the main type of trade? Is that the main type of trading that you do? Consider yourself a scalper, day trader, or do you ever have a longer term?
Not a scalper, because someone confused the scalper with a day trader. To scalp is a risk, because if I work in a bank and you call me for a price in 10 euro dollar, for example, a million euro dollar, I shop the price, you sell me or you buy, I don't know. And I have to immediately to recover, because it's not my position. I try to read what you have to do.
Right.
If the market pushing up, probably you are buyer. So I move my price higher. If you buy, I try to recover immediately with 1 or 2 pips. This is scalping. But if I work using 1 minute and 5 minutes, I lost the control of the market, because I am concentrated only in the bar. I mean, only in the candle. And the risk is that you can earn 10, 20 pips a day. But if you, when you read,
Do you think that this attack on the dollar is something that's not short-lived, like the big bear market rally? We peaked around 140, went to 103. A lot of people could call this a bear market rally. Do you think this is the beginning of a secular trend, or just
well, for the long trend? Well, honestly, I think that the real euro dollar
fair value?
just my personal view, of course, is 1.10.
Okay, 110 is
The
fair
rest
value.
is only effect of the arbitrage.
Okay. Walter, what a great interview. You know, I want to thank you so much for taking the time to be with us today.
Thank you.
You know, I say this, and tell me if you agree, that you can't learn experience. It only comes with the passing of time and living through things. And in our business, that time is screen time.
I thank you very much, and wish you all the best. And remember, my friend, always here.
Thank you so much, Walter. And I also say, Walter, you can't learn experience, but you could speed up your learning by learning from the experience.
Never stop learning. Never stop.
Everyone thank Walter Vanelli for being with us today, a veteran from the trenches at the banks to a humanitarian, helping people and staying with the students for as long as they need him. Thank you, Faith. It was a pleasure meeting you, Walter. Everyone have a good day.
Goodbye to you.
All right, adios, my friend. Ciao.
All the best. Ciao.
Ciao, buddy. My trading warrior brother, Walter Vanelli. You can follow him at Walter Vanelli, and I'll see everyone tomorrow. I want to thank Steve Volge. I want to thank Stelios, who I interrupt all the time. I want to thank Blake. What a great call Blake made on Euro Pound. You caught the Euro Pound, click the link, www.forexanalytix.com. Get on board with the best team on the net. Adios, my friends. And most of all, you're welcome, friends.
You're welcome.
Adios. And most of all, don't just count your pips, count your blessings. Having Walter here today was a blessing. See you guys.
Thank you. See you soon.
See you, my friend.